Welcome to another Founder Wisdom Pod. We have Michael Kelly on. He's the founder at Investment Science Realty. Today we're going to talk about AI trading, AI finance, and everything that's happening into this market. This podcast is brought to you by podpair.com. If you want to start or scale your podcast, Mike, welcome to the pods. Tell me a bit more about yourself and what you're up to nowadays.
Sure. So I'm Michael Kelly. I'm the founder of Investment Science, which is a management consulting practice. We stay on top of the latest trends for banking and technology. Quite simple, objective consulting without compromise, no strategic ties to vendors. Which means if you look at some of the other firms out there, let's say some of the big four, they audit a firm, let's say Amazon Web Services, they cannot provide that service to you. We could go in there and give you purely objective advice. Those different services that we can do for firms are business driven, which is front, middle, back office for banking. So that could be capital raising, it could be anything in that. Strategic growth is sales automation techniques. So actually leveraging technology to reach out to the proper people you're trying to grow and connect to. And then technology enablement, which is more software development, but even technology today is moving more towards, no code programming and configuration. Uh, I've said on other podcasts, programming is becoming less relevant. And now I'm trying to analyze how do you connect firms to better work with government. So we take a step back that, like from a people process technology, do you have the right business connections for your firm? Do you have the technology capabilities? Are you integrated with government, such as, the Exim Bank, which is the Lloyd's of London of the United States, to actually ensure export of US products to other countries. So I'm focused just on a lot of everything around me, building new financial products, financial engines. What about you?
Right. I do a bunch of things. I have a bunch of businesses. Cold emails, my main superpower. So product market fit, go to market. So testing at scale scientifically and going from zero to one. Yeah, I'm on your website and I'm seeing yeah, your pricing. So is your value offering like mostly instead of hiring a PwC or a Deloitte, like coming to see you and getting like similar if not better advice at a lower cost? Is that it?
Um, it depends on the engagement. I mean, some of those firms we've actually consulted for as well that you've listed. So it's like having that type of capability, but you want purely objective advice. Let's just say, like, I'm not really sure what to do here. I want all options on the table. Whereas if I went with one of those firms on consulting, uh, maybe I wanted for a technology engagement project, maybe I wanted to use Amazon, but because they audit Amazon, they can't provide that to me. So I'm missing out on that. Right. That's on the consulting side. On the treasury management side, we have Sage Fusion, which conducts money management for high net worth individuals as well as firms, right? And we leverage advanced statistical models, artificial intelligence, data feeds that are hard to find, and just my knowledge from working on Wall Street for over a decade. And some more banking trends that are coming out. I mean, we had the Fed Now that was launched, and banking's trying to essentially have real-time transfers of wires and almost taking all the technology from crypto and the blockchain and merging that into government to say, hey, can we have a digital currency? And can that be backed by gold assets to curb inflation? But then I try to tell a lot of people when we talk about inflation, is inflation bad? It can be, but what's even worse is deflation, because as prices go down, people will wait to purchase goods and services, and it creates a spiraling downturn. Whereas with inflation, if prices go up, people say, if I spend today, um, I'm able to grow what I need to get something at a discount, and that creates more job growth. So in that regard, that's kind of the product differentiation. But we're building out unique capital products for people who seek capital raising, such as, you know, I actually want to see the future state of finance to be everybody within a reasonable business plan who's compliant, uh, get capital within 24 hours, and they're not going to have to pledge their house. And if they default, they don't take anything away. And then we can build advanced insurance products around that so that if things go bad, there's still profits for everybody. So there's even ideation on FDIC insurance. Um, it's it's referred to as shadow banking, non-banking entities conducting financial activities. How do we better insure products? How do we better prevent financial panics? How do we better control our exports? Meaning, a lot of the supply chain that's conducted outside of the US, and we had a black swan event, COVID, supply chain shut down. Why is that? Can we de-risk things? So that's some of the insights our firm can provide to, small companies or large, or CEOs, CTOs, CIOs, decision makers, or somebody who's just saying, hey, I want to raise capital. We try to make it about the client, not about us.
Right. First question I had for you is why leave Wall Street and 300K salary a year? Like, what are the downsides of working on Wall Street?
I think the downsides of working on Wall Street, it's not always a collaborative environment. I've always told people if everybody in financial services was collaborative, I think most of the roads would be paved and there'd be less poverty. So it's hyper competitive environment, um, super long hours, and it's hard to maintain a lot of personal relationships when you're working those hours. But on the plus side, you work with many smart people. There are some very nice people in the industry, and you learn just how financial markets are, down to um, how capital is created around the world, down to that level. Like, how do you launch a bank? How do you own a bank? How do you launch an insurance company? How do you build new products? So I tend to take that experience and then going to college and entrepreneurship and banking and saying, well, how do we take the entrepreneurial mindset and merge it with banking and build new products for consumers and solve problems that everyday people are facing, or even what are executives facing today?
So during your time on Wall Street, what kind of fires did you have to extinguish?
So some clients I worked with could be regulatory fines, something referred to as front running. So let's say the euro, I purchased the euro and then I sell it to a bunch of other clients. That would be front running. So like regulatory fines, I did a 3-year project at a bank. I've rebuilt credit rating models. So looking at all the different credit rating agencies and combining some of their methodologies and looking at some of the fallacies of their models and building out a new numerical scorecard on that so we could better assess risk of firms from credit deteriorations. Some other things I've done is actually just go into, a bank and run it like a startup almost, let people work remote who are uh, introverted, although that's not as much of a thing with the post-COVID economy. Um, and it's analyzing everybody around you to boost productivity. So it's been all different types of engagements, down to coding high frequency trading software, market making, hedge funds, private equity. Prior to college, I worked with a lot of hedge fund seeders. So I actually learned hedge fund structuring, private equity. And then I did about a decade in banking technology, but I always differentiated myself because I understand the business, but then I could write the code to automate the business.
Right. I'm reading some of your predictions for the next couple of years. So first, can you tell us about like the state of economy since COVID's, namely 21, 22, 23, and now this year, and also tell us about the impact of AI on economy and some of your predictions in that field.
Right. So, I mean, I think I had a professor say almost a decade ago, 50% of the positions created don't exist today in the next 10 years. So I think in one sphere, we're going to have new types of positions from AI, but at the same time, we're in a bubble that I always tell people when everybody's talking about it. I don't want to say do the opposite, but be cautious because I recall in 2021 or 2022, I was out in Silicon Valley capital raising, and I had venture capitalists telling me, hey, if it's not crypto, I'm not doing it. I had the Uber driver say crypto, and I'm like, okay, I'm actually going to take my portfolio and short crypto because everybody's merging into this, and there's a technical support pattern, and so it's complicated in that with these bubbles that occur. So like AI is in a bubble right now. If you do the opposite, you could get yourself in trouble. But if you're cautiously watching it and you ride that wave and then you pivot to the next thing and you had your bets, you could profit from that dimension. But the AI, a lot of it's no code programming. India economy has been booming. China has not been doing too well. A lot of people don't know that India's top five economy now. So that's something to keep an eye on. And what we're probably going to see, I think, in the next 5 years or so, is a lot of this commercial real estate, which that's a large umbrella because that includes um, like strip malls, but I'm talking about in like major cities. I think it's going to be its own financial panic, and that a lot of that where people moved from, New York down to Florida, we're seeing real estate, I don't want to say collapse, but some of those prices to correct. So hard to always say what the future will be, but you saw that I saw something with Wendy's where they have people talking to the screen and doing all the orders. I'm teaching AI at college. I actually encourage some of my students to use the AI tools out there, and they're actually learning to ask the right questions. So you're going to see probably corporations, unfortunately, cut a ton of staff, but then a fraction of those positions will be brand new positions. And we're kind of going through an economic displacement that those displaced workers will probably launch new products, new ideas, new solutions, and it's still me encouraging individuals and corporations integrate the technology, integrate the economics, integrate with government, look at your beachhead strategy. Don't be afraid to bring in consultants, and don't always do what everybody else is doing. Right? I mean, there's just balancing these things.
Right. And on your side, how will these trends be affecting you and your clients' investments?
So on my side, I mean, I've actually pivoted my career a little bit more towards government contracting the past year or so, and that I'm actually taking thousands of pages of government documents and creating Silicon Valley style pitch decks to communicate with banks to get investors to fund projects which provide government guarantees after a couple of years. But then through this knowledge, I am actually learning, how to interact with government in a positive manner. Like I was saying before, you could do a JV with a joint venture agreement within a US based company to a European company, let's say for a construction project. You could get it insured by the Exim Bank, which is the Lloyd's of London, and then you could do a government construction contract, or you could do a private enterprise because I'm kind of doing more strategic partnerships, public-private partnerships. I mean, when we do capital raising, we look at everybody who applies for a loan. So let's say there's 10,000 people. Most of them are decision makers. We match them to each other as well to do projects together. So you kind of build out like a networking group, but then you write down all the problems of networking groups, of people charging fees just to join meetings, people not being compatible, and then you curate it so that there's really no upfront fee. But then if something happens, both sides are being collaborative from a share economy based, and that's how we create more jobs for everybody.
Right. And nowadays, how do you split your time in between the consulting, Sage Fusion, and ISR?
Yeah, so I mean, right now the consulting, that's more government contracting. I'm taking my banking knowledge and launching, um, like private equity funds on infrastructure projects. And then what I do then is actually from the students I teach, I can get the workforce services to actually bring them in to work on a lot of these consulting projects from the students I'm training. So I kind of leverage students who just got out of school so that they want to learn new things. We use the technology, automation, AI, all the things you do, email marketing, LinkedIn marketing, sales automation. We organize it. And then Sage is in the process of being seeded to actually grow assets under management, and go-to-market strategy there would probably be mergers and acquisitions to acquire registered investment advisors. And then what we want to do once we monetize everything we're doing, we want to launch consumer products of, you just write down problems. Like there's a lot of people with business ideas and they can't get the funding. You call a bank today, it's really hard to get on the phone. Just finding someone to pick up the phone. Different age groups, how do you communicate? I mean, and you can't say that with everybody, but 45 plus, a lot of them still like to hop on the phone. Some of the people I'm teaching are in their young 20s. They're wired a bit differently. So you look at each age group and say, how do we interact with these different personas and get people to work well together?
And a lot of older gens, they're always shitting on younger gens. I see a lot of potential in them. They're tech first for sure, which is an unfair advantage compared to boomers that should retire for most of them because they just can't adapt to these new technologies. So, what are you seeing in this new generation that you're teaching?
On the negative side, I'm seeing short attention spans that they're saying, well, it's from TikTok, Instagram every 30 seconds. So it's sometimes hard to have them stay focused. On the positive side, I see a lot of optimism, like that they just want to change things and make things better and develop new ideas. Um, I'm seeing a lot of them just kind of come in ready too with they've been, on computers since they were born, basically. So they're just wired differently. I think an area of improvement is probably interpersonal connections and relations and actually physically meeting people in person. Um, uh, I myself am a millennial. There's not many people in banking that are millennials. Most people are 45 or older. Some of that has to do with the financial crisis. That was a shrinking industry when I broke into it. But then I'm cautioning of the future of, is there going to be labor shortages in insurance and financial services, because the young people, do they even want to work in these fields? Everybody wants, I don't want to say everybody, but many people want to be influencers today. The older generation, like the boomers, I think rather than these different age groups writing people off, if they're younger, somebody older loves to hear if you're authentic and you listen to them, like, you have a lot more experience than me. Can you please mentor me of the things you know? Because they know things that other people don't know, and vice versa. If they're much younger, they could say, hey, I'm sure you probably are aware of this, but you may want to consider. So it's, how do you communicate with different age groups? How do you influence people?
Love that. What are your top goals for this year?
This year, I'm just essentially creating lending solutions and lending products for capital raising. So for example, a lot of people don't know if you have a patent, You could do a bond offering of debt on the patent itself without revenue. A lot of other people don't know if you have purchase orders, you could monetize those. So I'm looking at the whole balance sheet of companies that approach us, large, small, government, banking, financial tech. How do I match them to somebody they could work with? How do we build out an ecosystem where people are collaborative rather than a zero-sum game? That both sides are benefiting and we work together to achieve the common goal. And then how do we take these assets that we're building to build out new debt products or new financial products for corporations and consumers? How do we prevent these financial panics that occur? How do we prevent the supply chain issues that are occurring? How do we curb inflation? So I'm thinking about all these things and tying it into corporations and publishing a book probably this year on different financial concepts, but always trying to meet new people and solve their problems, you know?
Love it. Where can people find out more about you, Mike?
Oh, they could go to www.investmentscy.com, call our business line at 917-512-9523, or go to www.sagefusion.co if they're seeking treasury management solutions. Charles, so thank you so much for having us on your podcast and looking forward to connecting you to the proper people as well.